Well, bonjour, y'all. My name is Michel Fontaine, and I'm the CEO and head dreamer of Transaction Technologies. I'm a dreamer, and I do dream big. From my days as an Olympian to my 7 other ventures in the past, most of them actually got a bunch of accolades and awards for growth and innovation, and I got there because I dream big. And today, I'm here to show you the biggest dream of them all. I want to end the liquidity crisis in corporate America. Told you I dream big. Now the question is, well, it's interesting, but how will you do that? That's interesting. Well, we created a software platform that includes a selling tool named FlexCommerce. So it enables a seller to offer any domestic or international buyer the ability to pay his bills in 6 months. So that would trigger more business and larger orders. So our banking partners pay the bills in 3 days and collect from the buyers 6 months later. So we just enable more sales, an increase in cash flow, just by offering a financial incentive to a buyer. So our second system is called SCADS. Hello? I used to be a stand-up comedian, so that's too easy. We created SCADS, a purchasing application that does the same thing, but in reverse, since it is driven by buyers. So to give you an example of what that means is, imagine Home Depot offering their suppliers to pay them in 3 days in exchange for a 2% discount. And Home Depot turns around and pays the bank in 6 months. That represents a jump in cash flow for Home Depot of about $20 billion. $1 billion here, $1 billion there. Soon you have real money. Now, all of this is possible because we have an insurance policy with every transaction that covers the bank in case of non-payment from the buyer. So this is one of the reasons why our product is available at such a low cost. To give you an idea, as financing a 6-month transaction costs about 2%. So how much new business would you get? So we're marketing through middle market company with revenues over $10 million. And we're going to reach them through channel partners, banks, software companies such as Ariba, and consulting firms such as Accenture and Pricewaterhouse. So far we've raised $600,000 from friends, families, and fools, as they say. But an interesting difference in that raise is a large portion of it came from our employees and contractors. Not only option, they wrote checks. I'm really proud of my team. This is really a first-class team I put together. So today we're raising $2.5 million to be used for deployment and implementation with our partners. So we have a large local firm that give us a strong interest to take half the deal, and we're here today to find a partner. So now, to give you an idea, we make about $2,000 per order. Part of it comes from the commission we get from the bank, and the other portion comes from our So we're using this $2,000 with $100 million in revenue. So what you represent for investors, invest today, translates in a return similar to what you have definitely invested in Google. And that's my dream. And today, it's a reality. So I'm open for questions, and thank you for the additional time.
What say you all? Steve, we'll start with you.
I'm trying to make the numbers work. You're financing a transaction for 6 months for 2%.
Mm-hmm.
That equates to what, a 4% borrowing rate per year?
Prime, if you're in that range, you borrow at about 3.25, which is prime. The cost of insurance is 78 basis points, which is a shade over 4% for a year. So if you bring it back for 6 months, it's 2.1% ballpark. If you're a bigger company, you probably borrow at lower than prime. So, but that would put you in the neighborhood of about 2% per transaction.
So I assume it's a floating rate agreement, so if interest rates rise, that'll change.
It'll move with the cost of funds of the funder.
Okay.
In the case of, yes.
What kind of insurance company is it, and what kind of reserves do they have against this recourse bad debt write-off?
Interesting question. There's three very, very large insurance companies in the world that does that. We have agreement with all of them, which also includes, by the way, the U.S. government through Ex-Im Bank and the Canadian government through Export Development Canada. The company that we're the closest with did $4.7 trillion last year, and they do about 27,000 transactions a day. They do almost nothing in North America because probably none of you have ever heard of trade insurance. But in Europe, about 30% of the receivable are insured. So for them, working with us is a really great advantage to penetrate a new market. Typically, insurance is given to seller, not to banks. So we changed the process, we adapted to the market, and to come up with the end result to make it easy for a buyer and a seller to come on board. So, and our software application is free. That makes it easy. And if you don't like it, I give you your money back.
Let me think about that one.
There you go. So you're promoting the software to sellers, correct? Sellers of a good or service.
Mm-hmm.
And how are you getting paid again? Who's paying you?
The bank.
The
The bank
bank
pays me between, our price structure is between 20 and 50 basis point if it's a client of the bank, and 50 to 100 basis point if we bring the client on board. The insurance company pays us between 15 and 40% of the premium, depending if it's a private or the U.S. government. Guess who's paying the 40%? And we collect that every month. We get paid at the same time as the seller, which means usually within 3 days of the transaction.
So you're the borrower?
No.
Who's the
I
borrower?
work with banks. Right now, we have worked with National Bank of Canada.
Mm-hmm.
We ran about $100 million worth of transaction in a beta test,
Mm-hmm.
which is still going on to my great displeasure, but it's still moving in the right direction. We're in
Right.
serious negotiation also with a very large American banks,
Right.
and we have 7 banks that are waiting for us, but we decided to take one at a time and do it well.
So you're brokering the loan, essentially.
Basically.
And
We broker, we validate, we insure it. We automated the whole process.
right. And so where do you see the most risk in your transactions?
The only risk that truly exists, the risk that is not insured, is called trade dispute.
Mm-hmm.
So somebody order a green gizmo and you ship the blue gizmo. 3 things will happen. The buyer will say, fine, I'll keep them. He'll say, I'll take 50% off, or take them all back. The danger and the risk that exists in the transaction is if you return everything back, the funder will want to get their money back, or a credit if you have a large flow of transactions. If the credit is too big for what you can take, then it could cause that's where
There's a loss.
there's a loss, and that's not covered by insurance. So we create an underwriting model that will allow a bank to calculate the maximum that you would have on a loan and the maximum you will have at the system at once.
Right. How long does your underwriting take? So if I had a manufacturing company, and this was my biggest problem, right,
Mm-hmm.
is that my customers took forever to pay. How hard is it for me to access your capital? What is your underwriting like, and would I be able to get it as a startup?
No. Well, actually, we could, but I'd rather, right now, since we're just at the beginning, it's easier to work with larger company because of history.
Sure.
If once we get you in the system, you know your customer information to the bank, and you're approved, so we create a third line of credit, which is, we call it the Flex Commerce Credit. So typically, if you have a $2 million line of credit as a $12 million a year manufacturer, you can get about a $5 million
Okay.
Flex Commerce line. Now, you want to bring a buyer in, if it's only like $250,000, I can do it probably in less than 5 seconds.
That's fast.
He's a magician too, not just a stand-up comic.
And I like your
What is
shoes. Actually,
so-
5 million takes about 48 hours.
Okay. But the process that I go through as a business would be similar to the process I'd go through for trying to get a line of credit, et cetera. So I provide you my financials, et cetera.
Information,
Okay.
exactly.
Okay.
The same thing as know your customer when you move
Sure.
into a bank, and the same thing on the buyer side. So what we've done a little different is right now you have an underwriting done by a bank, and they will give you a percentage of your line of credit, percentage of your receivable, and percentage of your work in process and inventory. And we took a third one out where we took the private guarantee out, personal guarantee,
Sure.
and we replaced it by an insurance from a AA plus company.
Sure.
The AA plus company is happy because we format the information. For the first time, they see both sides of the transaction. The bank sees both sides of the transaction, and we're accumulating a very large quantity of transactions.
So you made the factoring safer.
Yeah. Factoring typically would be, they're running right now 1.5% to 2% a month. We run at about 4% a year
Prices.
because we took off most of the risk out of the picture and we changed the risk profile altogether. And a lot of the, interesting enough, during our beta site, one company that sells lobster, I've never ate that much lobster in my whole life. Listen, you've never been into a factory when you walk in, everybody's wearing rubber boots and you're wearing a suit. And after our conversation, the guy was so happy and he gave us 2 live lobsters. I was like, great. But typically what happened is he
So you don't want to have a dispute with him or you're going to have to eat a lot more lobster.
No. 55,000 pounds a day, that's way too much for me. But a good answer to this thing from that perspective is he went in and he was already a customer of the bank and he was financing his sales on a 30-day cycle. I said, why don't you go and offer him 90 days? I already got it approved for food product. And 90 days in exchange for a much larger piece of the business with the distributor. Then he said to me, well, my problem is now with all those apps, when a big boat comes in at the back full of lobster, he doesn't release it until he sees the money in his smartphone. Talk about cash flow in 5 minutes. It's very different in cash flow management, but the big difference that does happen is now he gets a guarantee from the bank that it will be in his account in a couple days, and actually in this case they do it in 1 day. So all of a sudden, this guy does $75 million a year, and he processes $50 million on the sell side and $40 million on the buy side.
Time for one more.
Barriers to entry, is your technology patented, and what's going to keep others from, because it's really a model, and as you're describing it, it's a model that others could say, oh, I'm going to jump into that market.
Well, we have patents, we have special, the transaction, the policy that we've created gives something unique to a bank. We're the only one that allows the bank to do it off balance sheet, no reserve, according to Federal Electronic Standard Board, AZF 815 for Stephen. And so by doing it this way, we created a whole, actually that insurance policy is called a transaction policy. And it was written specially for banks, which is never done before. So that would be one barrier. We have a couple of provisional patents, which is decoration, until you have enough funds to turn it into a process. And my experience with patents, I have a few of them in my other businesses. Before they get in, as long as you can, so no one can see what you're doing. And so this is from that perspective what that is.
All right, we'll shift the conversation from lobsters to sharks.
That's a good one. I like that one.
I like it.
I like you too.
What say you all?
Who's going to go, Steve?
Why don't you go?
Well, I know Michel. I think he's a good entrepreneur and a good businessman. So I would want to hear more in that regard. In terms of, I think, for me, I'd have to say, okay, are the banks in? Are the insurance companies in? Are they really moving to ready to go? You have a couple of customers, and then I think it's like really interesting model.
Yep.
Laura?
I love your big dreams and I love your passion. You're clearly excited about this, and I think you've identified an amazingly huge need.
And you know the market pretty well also.
I know the market pretty well. It's very large. I think you have a unique way of approaching it, and I would love to hear more about how you're doing it, because I think that's what it's going to take, is thinking different about something that people have assumed has always been just a part of business that can't be changed. So I would love to hear more.
Thank you.
Since we live in the private equity world of business and growth, liquidity is always one of the key areas of pain. So Lee Baines, my partner at Gross Capital, and I would love to hear more about that.
Thank you very much.
Fantastic. Outstanding. Michelle, thank you.
Thank you.
And his company is Transaction. And that wraps up the Shark Attack for this month. We will see you again in March. Thank you all very much, and make sure you check out the exhibitors in the hall. Thank you so much.